Twitter board just approved Elon Musk's offer to buy Twitter for $44 billion or $54.20 a share and take it private. What does this mean for your shares, your options? You definitely want to listen to this, especially if you are a Twitter shareholder or option holder, because what happens when a company goes private? A lot of you are probably looking at your shares right now. Twitter is sitting under $54.20 a share. So what happens? Should you hold on to your shares? Are you going to make money? Are you also going to be offered $54.20 a share? I'm going to get into all of that right here. Welcome back to The Traveling Trader. If this is the first time on the channel, welcome to The Traveling Trader. Leave a big fat thumbs up if you get anything out of this video, and let's get right into it. So as we stated at the outset, Twitter's board accepted Elon Musk's buyout of $44 billion for the entire company, or $54.20 a share. There was really no way for them to reject this offer because the purchase price represented a 38% premium to Twitter's closing stock price on April 1st, 2022. See, public companies have a fiduciary responsibility to their shareholders, meaning that they have to act in the best interest of shareholders. And if someone is willing to buy the company for a 38% premium, you will have a lot to prove in court if the case is taken to court as to why you rejected that offer. Sure, there were a couple of things that Twitter could have done to challenge this, such as enacting the poison pill and a few other things. However, those things require a lot of effort. They could even jeopardize Twitter's future, right? Especially like the poison pill clause that they were looking to implement would actually destroy Twitter if Elon Musk went ahead and bought the company anyway. So there was really no upside in them rejecting this offer because it would have required a lot of effort, a lot of legal loopholes. It would have cost a lot. It could jeopardize the company's future. Now, a company going from public to private is actually very rare, but when it happens, what we see from the price action is it's actually very muted up until the finalization of that deal. So what we do know as of now is that Twitter said the deal will close this year. That is why there is no rush to pump this stock up to $54.20. This leads me to the question, what happens if you are a Twitter shareholder currently? Well, if you are a Twitter shareholder currently, obviously the price action is still independent until the deal is finalized. The company is still public, meaning if investors wanted to, or if traders wanted to, they can trade this thing up and down, and you could see some wild price actions. But what are investors incentivized to do? Well, the reason that they're not incentivized to buy the stock in large amounts here is because the deal is going to take so long to close, right? The end of the year. I mean, we're talking about what, 7-8 months from the time of this recording. It's going to close at such a far out date that are you really willing to buy large amounts of Twitter at almost $52 just to make a $2.20 gain at $54.20? So what happens is when the deal is closed and the company is delisted, every shareholder, meaning you, me, the board, whoever, is going to get paid out $54.20 a share. If you haven't cashed out your shares by that time and you haven't protested the deal, because you are a shareholder, you technically have the right to protest the deal. And I will talk about that in a second. But if you haven't cashed your shares out, then your broker will likely just cash you out at the finalization of the deal for $54.20. That is what you're going to get paid for each share. Now, could the deal actually be nixed because of some sort of approval process or some sort of regulation? Yes, technically, yes. However, going private is much easier than going public, and usually they tend to be successful. So there is no real plausible reason to believe that this Twitter deal will not go through. Now, should you buy Twitter at $51.82? Well, if you have nowhere else to park your money and you actually think that the deal is going to go through, or you're very confident that the deal is going to go through, then sure, you can buy it at $51.80 and hold it until the deal goes through and is finalized, and you get paid $54.20. As a matter of fact, that is much better than what a 3-month treasury bill will yield you. Right now, the 3-month treasury bill yield is 0.82%. You're not going to get shit in your bank account. So if you just wanted to park some cash, and again, you are very confident that the deal will go through at the end of the year, then yeah, you can park some cash in Twitter and get paid what is that, like 4%? So 54.20 divided by 51.80 equals, yeah, 4.6%. Where are you going to get 4.6% in 7 months? I mean, you won't even get 4.6% from the 10-year treasury yield, which is currently yielding like 2.8%. Now, like I said, the price until then is technically free to move up and down. There is nothing. There are no rules that say as long as this is a publicly traded company, that independent price action cannot continue to occur, right? This thing can go to $2. This thing can go to $100, right? I'm not saying it will. I'm just saying technically it is still part of the free market and is publicly traded. Okay, now what happens to your Twitter options when the company goes private? Well, when the company goes private and it gets delisted, the same thing happens. If you're part of a reputable broker, the broker will cash you out for whatever value those options represent at that time. They're not going to delist the options that expire in 2023, 2024, because the deal is not finalized yet. And until the deal is finalized and Twitter is delisted, there is no reason to remove these. Again, it remains a publicly traded company where the price action is completely independent until the deal is actually finalized and Twitter is removed off of the stock exchange. Now, both sides of the options, calls and puts, are likely down. As you can see here, calls and puts are both down. The reason they are down is because all of the price action leading up until today, leading up until this announcement, all of the activity was based on the possibility of this happening. And once this happened, the options market is now tanking in implied volatility, tanking in activity. You're seeing a lot of selling of these options because the outcome is now known. And options are way more sensitive to supply and demand than stocks are because they are less voluminous and are time-based instruments. So you could see that calls and puts are selling off majorly today, which is causing the negativity on both sides. But yes, you can continue to speculate trading options. I personally don't think it's a smart trade from this point forward. However, if you are very confident in your options trading skills, your options day trading skills, yes, you can surely speculate on Twitter's price action up until the finalization of the deal. Now, lastly, I want to talk about whether you can actually reject the offer. Yes, technically you can. If you are a shareholder of any size, you can reject the offer, but one, it may not be a very smart move because if you reject selling your shares and most people sold their shares, the stock can become so illiquid that you could end up actually selling your shares for a loss if you reject the $54.20 offer. Also, you could technically challenge the proposed buyout in court. However, that is very expensive. And really, if most shareholders are going to sell their shares, there is no upside to doing this. It is kind of a stupid move. And unless you are a major shareholder and you have a real reason to oppose this, there is no upside for you. So yes, technically, legally, you can do it, but there's really no reason to do it. So there you have it. Summary: if you have shares and the deal is actually approved, at the time of the deal, you will get paid $54.20 a share. Nobody knows when the deal is, but it is likely towards the end of the year. You could still make about 4% between now and the time that the deal closes, assuming that the deal actually closes. Options and the stock will continue to trade until the company is actually delisted. And at the time of delisting, your options will cash out for the value that they happen to represent at that time if you're still holding them. Anyway, traders, that is it for this video. Hopefully you learned something. Leave a comment down below. Let me know if you are holding Twitter. Let me know if you're actually going to be buying Twitter just to make that small difference in stock price between what the stock price is today and what you're going to get paid for it if the company goes private. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.